All right, we have another one, ladies and gentlemen. We are going to look at a video that presents some strategies, some trading strategies to make that guarantee $500 a day for beginners. From the channel called The Data Trader, which has 650,000 subscribers, and this video was posted 8 months ago and has over 500,000 views. So it is time to review this video in parts. I'll probably do it halfway. Let's see how far we can get, and let's see if this strategy is legit or if the strategy fumbles and it's likely just clickbait and attempting to make trading look easy, as many of these really high and popular channels do. So let's get started. Let's take a look at that. Let's take a look.
Hey traders, in this video I'll be showing you 4 simple to learn trading strategies that's able to generate $500 per day in profits. And of course, these strategies are all backtested.
So immediately I want to react on this. 2 things. This video already guarantees you $500 worth of profit. That is alluring title, and it looks like, wow, this is a profitable strategy, look how much money I can make. But right off the bat, it is super misleading, because it doesn't say how much risk are you taking in relation to your portfolio, and in what way are you actually making that $500? Is your portfolio $500,000? Then $500 per day is actually not really that much. Whereas if you're just starting out with a few $100s, which is if you are beginning to trade, which is where this video is directed at, towards people that barely have traded a chart and just want to, start making money right away, likely don't start off with a portfolio of $500,000. So if you are having a portfolio of, let's say, a few hundred dollars, then what are you actually risking in order to make that $500? And how close will you be to liquidation at every single trade? So that by itself from the get-go is super misleading. And I already see also backtesting. So let's rewind just a few seconds.
$500 per day in profits. And of course, these strategies are all backtested to have a high win percentage.
Backtested to have a high win percentage.
So you can trust that they work. Absolutely misleading. Complete bollocks. Markets are dynamic. Backtesting might work to a degree and to validate a certain strategy, but never, ever gives guarantee that it is going to constantly work in a reliable way in the future. To take an example, we have been, or I myself have been trading Bitcoin for nearly a decade now. Strategies that worked 10 years ago were very profitable, don't work in the same way as that they do today. So you can backtest all you want and have, let's say, like a 80 or 90% win rate. In reality, that win rate is going to probably be a lot lower, and it will also depend on how you actually execute that strategy. So that just right off the bat. Now let's look at the strategy. Let's see what they have to say. The best part is that I've laid out specific instructions that you can easily follow, so after watching this video, you can implement these steps and start trading immediately. So without further ado, let's move on with the first strategy. For this strategy, we're taking advantage of what's called a stop hunt in order to find trade opportunities.
Okay.
Now, for those of you who don't know what a stop hunt is, here's an example. So let's say you look at a chart and you see the price rejecting an area multiple times. So you draw a support level. Next, as it approaches that level again, you think to yourself, the price did reverse from this support level in the past, so maybe it could reverse from it once again. Hoping for a reversal, you enter a buy position. Now, being the disciplined trader that you are, you did forget your stop loss, so you place it slightly below that support level. However, instead of reversing from that level, price instead went down, hitting...
Okay, so first off, straight off the bat,
actually, this is not a bad idea. This sounds legit. This sounds legit. Price does build up liquidity at support levels, and it does tend to either hold or fake out of the price action. I wouldn't be surprised if after this move down, price essentially is going to reverse to the upside. So actually, I do think that this approach to the market is definitely a good and can be very profitable. However, I'm curious on what the actual execution strategy on how he would be taking those kind of trades. Because the theory is here, and I do agree with that. This is legit. This is legit. I'm hopeful. Let's see how this progresses.
Your stop loss first before reversing back up.
Exactly. So exactly what I said. So you do fake out to the downside and then you get your reversal. This is very classic and typical of stop losses indeed getting hit, bigger orders getting filled, price reverses and trades the opposite way. So yes, that philosophy I do totally and utterly agree with. Absolutely.
This is called a stop hunt, and it is purposely done by institutions to hunt the stop losses of retail traders. Now, using the right technique, we can actually use these stop hunts to our advantage to get high win rate trade opportunities. And this is how.
I agree with that.
The first step is you want to find an obvious key level. This could either be a support or a resistance level. But remember, the key word here is obvious, because you want to find a level where many retail traders are also paying attention, which is usually more susceptible to a stop hunt. Here, we can see that the price went up to this level and reversed from it, making it an obvious resistance level.
Okay. This is good. So far, so good. This is actually good. It's going in the right direction. He explains step by step, find an obvious key level. He is using at the moment market structure to identify resistance levels. Wouldn't be up to my personal standards in the way that he's mapping it out, but it does get the idea across. So, so far, so good. Let's continue.
The next step is to wait for the price to approach that level again and break out of it.
Okay.
Once this happens, you take a closer look at the price action that's happening at that area. So, you zoom in 2 time frames below. For example, currently we're on the 4-hour chart, so let's zoom in into the 2-hour chart. Now, in the 2-hour...
Okay, I do like this approach. Wait for price to actually enter into resistance. In other words, enter into that liquidity zone. And then you want to refine the chart, zoom into a lower time frame. For day trading, this is still extremely high. So he calls this a day trading strategy. Trading on a 4 or 2-hour chart is not really suited for day trading. But that aside, the idea is there and the concept is there. Looking for that breakout and zooming into more detail to see how that more local price progression goes like. This is good. This is good.
Our chart, we can actually see a large green candle breaking that resistance area. Now, a question arises. How do we know if this will be a stop hunt or an actual breakout and price did continue upwards? So the good thing about this strategy is we could still make profits regardless of what's going to happen. So what I do instead, as soon as the price breaks this resistance area, I immediately place a limit sell order below this key level. Now, for those of you who don't know what a limit order is, it's simply just an order to open a position at a specific price. So only if price touches my limit order, a sell position would open. If it doesn't...
We were off to such a great start. Everything sounded actually really good. But here comes the fumble. And this just shows again and again that it's not that hard to learn a theory from a trading book or a textbook that this guy maybe bought on Amazon, but actually has no idea to put this actually into practice. I'll dive into depth in a second. Let's see what he has to say.
Then no position would open. By doing this, if this breakout happens to be a stop hunt, then our sell order will be triggered and we would make money as the price reverses back down. However, if this happens to be a real breakout and price did continue upwards, I
want to see how he goes about his invalidation and stop loss, because that could save the day. That could save the day, and that could make this what I would class a legit strategy. Let's watch And let's see how he would place a stop loss and invalidation.
Sell order would not be triggered and we won't lose any money. Now, to add another layer to this strategy, we can also place a...
So the first thing that I will have to say, to actually, personally, I wouldn't do this with a limit. This is essentially a breakout trade. However, the idea revolving around it to get into a position is legit, because you're attempting to break out, you fail to do so, and you lose support once again. And you're getting acceptance back into that previous trading range, which does signal a rejection. However, the place of that limit order is extremely arbitrary, whereas here, a little bit earlier, he maps out this, a support or resistance is being mapped out with a very nice key level. So essentially, this person seemingly knows how to use market structure.
Our chart.
However, now here we are actually seeing that sell limit coming in at quite a random level, not using market structure at all, because this actually, just these candle closes, or better, this is actually where that local support is set. This is actually where that support is set and where that validation is being given of facing a rejection. So essentially, therefore, for that reason, this sell limit order is by definition clearly a breakout trade to the downside. Which still, like I said, can be saved by placing a stop loss on an appropriate place. So let's see how that goes about.
Stop loss and profit target after one of them is triggered. Now let's see which limit order would get triggered. As you can see, price moved downwards and triggers our sell limit order, which opens a sell position. After
let's continue.
the sell position is opened, you place a stop loss in the middle of the breakout candle and take profit at 4 times stop loss.
All right, okay. So this is exactly what I mean. In theory, was great. Started off great. Step 1, 2, 3, looking good. But then when it comes to actually handling the trade, completely all rules and even contradicting their own strategy immediately. What does this person do wrong? First of all, he places a sell order at an actual support level. And as you can see over here, we see exactly that liquidity. We see a stop hunt here, literally, quite literally, right? So we take out this support and close back above. This is actually a stop hunt. In this case, it moved down even further, but you know, it's just a really, really risky place of entry. However, it can still work because the whole trading idea revolves around breaking out and getting back in, and thus failing to establish progression to the upside. So all in all, I would say that entry can be improved. A bit arbitrary, not really based on technicals whatsoever. But okay, fair enough, you know. However, really where the strategy fails absolutely and completely is just placing an arbitrary stop loss. This is not a place where you want to place a stop loss, simply for the reason because this 90% of the time, and quite literally in the market, price does this and then actually retraces to here and then continues down, for example. So this is just an arbitrary force-fitted stop loss to make the trade worthwhile, to make that risk-to-reward ratio worthwhile, but actually in practice this has a very low chance of ever succeeding. So if you are a beginner trader and would execute this strategy without any further knowledge, you will be guaranteed to not make $500 a day, but you will be guaranteed to lose, because the correct invalidation of this trade should be above this high, because that is where that failed breakout actually failed. The only way of that being invalidated is to simply make a new high, not get back above that resistance, but using that latest price action. So that would make this strategy a lot more valid. But also here, when it comes to target, just blindly saying, oh, we're looking to 4 times what we're risking by definition, For what reason? Why are you looking for that 4 times risk to reward? Are you longing are you actually shorting here at a very high time frame resistance, or is this more like a local time frame resistance? And what is the reason why this is the ideal target? It's very random and not based on market structure. We already see here in the prime example, right, that here we have that market structure exactly as the same person that is now executing the trade in a very suboptimal way, showing our theory here that this is support, so why not take profit here? And we see it actually in the example that the chart is reacting in that similar way. It is actually bouncing, showing that this support is legit. Whether it's ultimately going to lose support, we don't know. But it is a solid take profit level. So why not take profit here and then stretch the trade a little bit lower? You know, a lot of things to say about this wave trading. However, the strategy is pretty decent. Or the theory behind it.
And as you can see, price continued downwards and hits our take profit. Let's move on to the second strategy.
Well, ladies and gentlemen, I've decided to cut up this video in multiple parts because I felt that as I was going through the video, there's too many things to say about one particular strategy, and I want to be thorough and rigid because I don't want to just make this video only for entertainment purposes, even though if this is entertaining to you, then that's an extra bonus. But ultimately, the goal is to also bring you adequate information and also, more importantly, explain you exactly why certain strategies are suboptimal to execute. In this one, we started off with actually on a really good start. I liked what the video was suggesting, and in theory, all of that is actually true. It headed in the right direction. But later on in the video, it truly, and I do think this is something that you can only see if you have been trading the markets yourself. You can just see there's just a really big gap between theory in knowledge in terms of theory, reading and learning about concepts such as liquidity and stop hunts, but actually in practice literally failing to make this work into a solid strategy that actually has a high win rate. Completely fumbling on the rules and simply just not really knowing what they're doing. To me, it is a very big surprise that these channels have gained the amount of traction that they have. A lot of this strategy is very misleading, although there are some, I'm not gonna lie, if there is a good strategy out there, I will not lie about that. I will not just say that everything is bad. And it started off in a really good way, but as we went along, it is just clear that this YouTube channel in particular, or this strategy, is not fully fleshed out, and little research has been done, and this video has been solely created to simply generate views rather than actually educate you into what is realistic when you're trading, and how you can actually put that theoretical practice into real practice trading the real markets. It is very clear to me that that is not the case when this video was made. There's clearly a different intention behind it. The title shows it. The first 14 seconds of the video show it to get you into that video, and then follow up with completely misleading information and giving you simply a losing strategy as a result. That is why my message to you here today is be careful who you follow out there. The amount of views and the popularity that someone has says nothing about their actual skill of being a profitable trader in the market. And another one is you can be a great technical analyst, you can be a great student of the game, but doing technical analysis versus actually being a good trader, those are two vastly different things. If you want to learn how to actually execute the theory into practice in a live environment, then
That is what I set out to do in order to tackle this information and to actually bring you quality education. That is why we have Thrive Labs. You can visit our website, thrivelabs.io, which is our website, an educational platform where you can actually learn real theory and also how to, the actual information. So basically what I've already mentioned in earlier in the video, but it goes way more in depth and brings it from A to Z all the way to execution of the trade. You will get access to a member portal where I'm making plenty of content talking about the live price action and how I want to go about it, my exact trading plans. And then on top of that, we also have a Discord channel where we go over the exact execution of the trade as price is reaching important key levels, as you can see over here. Following up from that, we go on and talk about the exact way on how to get into the trade, the pros and cons, adjusting also for swing traders alike, day traders alike, more conservative traders and more aggressive ones. That is where we got you. In Thrive Labs, we got you. The only thing that we ask from you is dedication and willingness to learn, and together we can grow. If that is something that you're looking for, then I recommend visiting our website. You can find the link in the description below. And with that, I hope that you've gotten a little bit more insight. If you are starting out looking for information, know that free information is not always the best information. As a matter of fact, quite the contrary. So big channel or not, I hope that this is giving you some insights in how misleading it can be and how difficult it can be to find the right person to learn from. So with this, I hope that I've educated you a little bit more or helped you gain a bit more insight in how it should be looked at and what is out there to learn from. So with that, I'm looking forward to seeing the next strategy in this video, which will come in a follow-up video. Thank you for watching. If you haven't done so, if you like this kind of content, please do leave a like and subscribe, because not only do we reactions on these kind of strategy videos, we of course also look at the markets, we analyze the markets, and we are speculating on the fact on what we think is the most probable to happen, backed up by actual data, not by what we want to happen. And that is what separates us from the rest. Have a great day. Cheers and goodbye.